And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning coming to you live from Channels HQ right here in Lagos. We have 55 minutes of insightful conversations coming to you, and you can also get a sense of where to put your money because we track every market. And talking about markets now, let's start off with the global oil market. We see oil prices retreated further from a 10-month high today ahead of the U.S. Federal Reserve's interest rate decision, with investors uncertain when peak rates will be hit and how much of an impact it will have on energy demand. We see prices fell despite a bigger than expected draw on U.S. oil stockpiles and weak U.S. shale output that indicated tight crude supply for the rest of 2023. Global benchmark Brent crude futures fell slightly above $1 to $93.33 a barrel at $93.54 a barrel. Brent hit $95. Remember, that was earlier this week. Investors are awaiting a raft of central bank interest rate decisions this week, including one by the U.S. Federal Reserve, that's today, to assess the outlook for economic growth and fuel demand. The Fed is widely expected to keep interest rates on hold, but the focus will be on its policy path, which is unclear. Meanwhile, ExxonMobil president of global upstream operations, Liam Mallon, has pledged new production of nearly 40,000 barrels per day in its Nigerian operations in the short term. The new investment comes as President Bola Tinubu hosts the leadership of the multinational oil and gas giant in New York, where he reassured the global energy industry that Nigeria is more than ready for business. President Tinubu promised that all bottlenecks will be removed to pave way for new and significant capital flow into the country's oil and gas industry, which will lead to job and wealth creation for Nigerians. And the federal government has recovered 5.2 trillion naira debt from 10 ministries, departments, and agencies through its Project Lighthouse program. The Director of Special Projects at the Ministry of Finance, Aisha Omar, made this known on Tuesday at a sensitization program on the federal government's debt recovery drive. According to Omar, these debts came to the spotlight from data aggregated from over 5,000 debtors across 10 MDAs, while the aggregation process is still ongoing. She emphasized that the core focus of Project Lighthouse is to leverage big data and technology to help block revenue loopholes, identify new revenue opportunities, optimize existing revenue streams, especially non-oil revenue, and improve fiscal transparency. Project Lighthouse is a government initiative which is designed to help solve the intractable and perennial problem of debt recovery by utilizing big data analytics technology. And one of the ways the nation's currency can gain strength against the dollar is for Nigerians to think exports. These are the words of the acting Comptroller General of the Nigeria Customs Service, Mr. Adewale Adeniyi, was speaking at a meeting with the United Nations Habitat Ambassador to Nigeria. Customs boss also reiterates the commitment of the service towards curtailing the activities of smugglers through the deployment of ICT. Take a listen.
We are doing more of importation in Nigeria. We are not doing exportation. So we will only cry over the value of the naira if we do not take concrete action to shore up its value by ensuring that we also make trade. Trade has two legs. You know, as I'm selling something to you, we are exchanging money. You should also be able to sell something to me. So Nigerian ships that are calling into our ports, they are only bringing stuff for us. Those ships are going back empty. So our naira will continue to suffer from that kind of imbalanced trade. So we need to make efforts. So on one aspect, we're asking them not to smuggle, but on the other, we must be deliberate and ask them to produce for export so that we can also earn this forex. We do have a very efficient, well-structured cybersecurity unit because we do know that this is a very important aspect of our operations that we must take, very, very important. It's no longer enough for us to set up checkpoints to start pursuing smugglers all over the places. We do know that these criminals are not resting in their hours in terms of how they are moving a step ahead of security to perpetrate their crimes. And we do know that we now have to also step up our games and acquire these skills to be able to cope with the kind of danger that they pose, not only for us, but also for our national security.
And a pressing issue that's affecting many Nigerians now, the rising cost of rice. Rice is definitely considered a staple food in Nigeria, but recent developments have led to concerns about its affordability and availability in the near future. Now we delve into the factors contributing to this issue and its potential impact on the people and economy of Nigeria. Joining us now is Mr. Mohammed Isiaku, Managing Director, Gerawa Rice Mills Limited, joining me from our Kano studios. Great to have you on the show. Good morning.
Thank you so much. Good morning.
Good morning. So we're seeing prices of rice. Fantastic. Great to have you. We're seeing the prices of rice rise from 2022. We're seeing rice now at about 60,000 naira per 50 kg. That's a big jump from where we were at 2022. Can you paint a picture of the update of what's happening now? We know India, they did ban exports of rice, and that also trickled down to impact rice importation right here in Nigeria. Paint a picture of what's happening now with rice.
Okay, good morning, and thank you for having me. Actually, the ban of importation by India does not necessarily contribute much to the rise of prices of rice in Nigeria. What is actually happening is the gap between demand and supply. As a country, our demand is falls about 11 million metric tons per annum. What we produce as a nation is about 6.8 million naira, 6.8 million metric tons, sorry, per annum of rice paddy. So definitely that gap between the demand and the supply will create that pressure and spike in price of rice. That's one factor. Then second factor is this issue of climate change that is actually affecting all the farms across the nation. Cases of flood, cases of birds attacking rice farms. So that also further creates shortage in the supply of paddy rice in Nigeria. If you cast your mind back, you can now see that over the first 3-4 years, there has been ban in importation of rice in Nigeria. Yet, Nigeria as a nation continued to thrive in terms of rice production. But what happened last year was actually majorly from these climatic issues, flood that affect a lot of farmlands across the north, in the corridor of around Kebbi State, some birds attack on the produce, and issues like that.
So talking about the floods now, it seems like these issues are quite seasonal. Is this something that will go away with the season?
Yes. We have collective responsibility to address these climatic issues, because one of the ways to address these issues is, basically when it comes to rice production, we have two basic seasons, the wet season and the dry season. So what is more reliable is the dry season production. And I think that is what we need to focus more on, whereby you have control over the channels of water, you have control over so many other inputs that can help you produce more. But traditionally the wet season, we tend to get more produce over it. But as we are seeing over the last few years, farmers will now go plant, waiting for the harvest time. All of a sudden, the flood will come and now wash away the farmlands, So wasting a lot of resources and creating further shortage in the food chain in that aspect of I'm
talking about the flood issue right now. Are you guys thinking about some kind of technology that can help with, managing the flood issue right now? Is that being discussed, like with people like you? Because I know you're a miller.
Yes. Okay. Issue of technology investment in farmland, cannot be overemphasized. Investing in technology in the farmland would further help this. When we have technology that can be able to predict when this flood is going to come, and when is the right time for planting, when is the right time for harvesting. Because what happens, a lot of time people plant late. So, before the time of harvest, this flood will now come and now wash away. So it goes a long way to educate these farmers, and those in the primary production of rice, to understand the timing, and to also understand that these are the time that the rainwater comes, and that these are the time that we are likely to have flood that will come and affect the produce. So, that enlightenment will go a long way in educating the farmers and now saving the country with that wastage that is created by the climate.
And definitely, as a miller, you need ample supply of paddy at this point. Do you have any other avenues opening up for you to get reliable supply of paddy?
Our paddy supply comes from across the country. We have basically 3 corridors in the north. In the northwest, we have the corridor of Kebbi State that goes down to Kamba. In the northeast, we have the Taraba State, Adamawa State corridor, and in the north central, we have the Nasarawa State corridor. These are areas that produce rice, and we rely on these geographical areas to get the supply of paddy. And what is good is that, the production comes as one corridor is beginning to harvest, and the harvest is coming to an end. That is when the other side picks up. So, the supply comes from across this region. So what we need to mind, you understand, as a people collectively in Nigeria, is to make sure that there is a connect, between this region. The agrarians need to come, you understand, come up with data, come up with solutions that will help us aggregate as much as we need in order to continue to mill this rice and produce rice to the nation.
Right. Let's look at funding now. I did see headlines a while back that for the Anchor Borrowers program, we see that the CBN is at this time trying to get back most of those loans, get them repaid, at this time. And I see some farmers already lamenting, at this point. Do you think the farmers didn't have enough time to pay back these loans?
Okay, Metras, I don't want to go into the financial aspect of, farming, because for me, I'm a miller. And that Anchor program normally targets the primary producers, which is the farm owners.
I did hear some millers got funding too at some point.
Oh yeah, we do. But we now mention the Anchor Borrower program, which normally deals with the aggregators, whereby they group some people, monitor the activities of their farming, and now take up the produce. Much as we don't, as a company, engage in the primary production of rice, but I have the understanding that, in a way, if there is one good thing that Anchor Borrower program did, it spikes the initiation of primary rice production across all villages in Nigeria. Because if you look years before the initiative of the Anchor Borrower program, you find that only a few corps of farmers engage in active rice farming, which one of the challenges is access to funding, which, as we all know. So now when that window of finance was freed and open, people now had access to funding, so that they can now mobilize these resources to their farmlands and be able to produce. And that is why we now source our raw material for us to mill and produce the final product in the country. All
right, Mr. Asiaku, before I let you go, what kind of interventions would you like to see, from the government at this time? And tell me, where do you see the price of rice at the end of the year?
First of all, the intervention, I want the government to actually focus on the primary production. One, in terms of technology. Two, in terms of advisory services. Technology, when you take a common farmer in the village today, cultivating 1 hectare of land, he'll probably get like 8 tons, or on the average 7.5 to 8 tons per season. So what technology are we going to deploy to these farmers and advisory services so that the land they are cultivating can be able to produce much more than we are getting? Because when you look at the world data, like in China, the hectarage they are cultivating and what the yield they are getting is far, far, far more than what we are getting today. Even if you compare China with India, China is ahead. Because in absolute number, you'll find that China produced about 214 million tons of paddy per annum, using only 153 acres or hectares of land, while India uses 129 hectares to produce 172. In Nigeria, we use 34 hectares, million hectares to be able to produce 6.8 million metric ton of rice. So maximizing the output using the same resources will go a long way. So the government needs to really coordinate this activity, educate the farmers, deploy necessary resources, advisory services, so that these farmers can understand that with minimum resources, they can get maximum yield on their farmland.
Right.
So we really need to focus on that.
And what do you see the price of rice at the end of the year?
Thank God. Price of rice will definitely come down.
Right.
Because if you take like the last 30 days, where we've been bedeviled by the shortage of paddy in the country, this issue is now being eased gradually. Because when you now go around Kano City, which fortunately we are becoming one of the leading rice milling corridors in the country, you find out that a lot of raw materials, paddy, is coming to our factories. That shows a very good signal that we will continue to get these raw materials. And the more we get these raw materials, the more we produce, the more it will now address that demand that will now cushion the price effect. So I see the price of rice coming down in a very short while. And thank God this is the wet season. And immediately the wet season ends, we roll into the dry season harvest, which is like more assured.
Right.
So, and year in, year out, we get increase in the output that comes out of the dry season across the country. So with that hope, I see the price of rice coming down from possibly the next 3 weeks and going down throughout the year.
Fantastic. As long as there's light at the end of the tunnel, because you don't want to play with our jollof rice and our condiments we make with rice when the holidays come. Thank you so much. It was great having your perspective. Mr. Mohammed Isiaku, Managing Director, Gerwa Rice Mills Limited. Thank you so much.
Thank you so much for having me.
All right, there you have it. Price of rice is going to come down right from Mr. Isiaku's mouth right there. So after the break, we'll drill down on the countries in Africa with minimal risk and maximum rewards. We'll see how people can put their money, especially for international investors. That's our next conversation. Do stay with us. This is Business Morning. Welcome back. Well, the Africa Risk Reward Index 2023, a comprehensive tool used to assess the investment landscape and economic potential across the diverse continent of Africa, As investors and businesses increasingly seek opportunities in this dynamic region, understanding the risks and rewards associated with different markets is crucial for making informed decisions. To help us understand the report by Control Risk and Oxford Economics Africa, joining us now is Ms. Oluwadamilare Desola, Associate Director, West Africa Control Risk. Great to have you on the show.
Hi there. How are you doing?
Fantastic. So talk to us about the 2023 Africa Risk Reward Index, your major findings and what it seeks to achieve, and, what countries in Africa are investable with minimum risk and maximum reward.
So this is the 8th edition of the Africa Risk Reward Index. And essentially what we're looking to achieve is to assist businesses that are looking to either grow their business within Africa or to invest in new markets, help them to understand the risk and reward climate, essentially getting into, because many times when you want to make a business decision, what makes the difference between whether you go ahead or you don't is to the extent to which the reward outweighs the risk. And so we've mapped 24 countries, and it's interesting to see the evolution of the investment landscape in all of these major African countries and provide that longer term outlook to say, okay, these are the trends that we have observed in the last 8 editions that we've done. And this is the direction that is likely to continue in. And so it's a lot of information that we have in there. And we essentially assessed the risk using 3 main themes of polarization, finance, and security.
And definitely, this report has been released at a time the world is facing growing geopolitical tensions. But despite all of this, all the risks, African countries hold huge potential. Given the geographic diversity, what are the opportunities for a country like Nigeria, and how best can they be unlocked?
So yes, you're right. There's growing geopolitical tensions, and that's really what we capture in the theme that is polarization. But when it comes to Nigeria, everybody knows that Nigeria has, even in our index, Nigeria came up in the top 3 countries when it comes to rewards. So there's a lot in there, and that's attributable to really the sheer size of Nigeria when it comes to its population and its economy. And so even despite the forex deregulation, where GDPs are categorized or are qualified using dollar rates, Nigeria still remains one of the largest economies in sub-Saharan Africa. And so there are several opportunities. To go through them would be very long, but I'll just highlight one, and that's something that comes up in our report, which is the opportunities of financial services. So a report last year came up to say that in Africa there was about $5 billion raised in Nigeria. Nigeria accounted for about 20% of that, and the majority of even that portion that went into Nigerian startup companies went into fintech. And so we see several opportunities across the board in manufacturing, agro-processing, even in oil and gas. Despite the world moving to energy transition, there's new opportunities coming up there for more sustainable approaches to processing or even exploring the different resources that we have. So the opportunities remain vast, and that's something that investors are very much aware of.
Right, and looking at the report earlier, I did see that Nigeria improved when it comes to risk. That was in 2023. I saw the bar, shifted a bit and, showed some kind of improvement, with risk. And I saw reward also improved in 2023. What would you say drove that?
So it's important to caveat that despite the improvement, Nigeria still remains one of the highest countries with a score of about 5.5. But at the same time, on the flip side, the reward is also one of the highest in the region. And essentially what drove that is we've seen, like I mentioned earlier, we categorize our risk in this report, we focused on the 3 themes of polarization, finance, and security. And what we've seen is that there has been some improvement in the last 12 months when it comes to security, when it comes to mobilizing forces to address some of the security concerns, particularly when it comes to the Northeast region and Boko Haram and terrorism and some of these challenges that we face. But despite this, I think it's important to, while we do the year-on-year comparison, looking at Nigeria this year and Nigeria last year, it's also important to look at the other regions around Nigeria, whether it's in West Africa or in Africa as a whole, because at the end of the day, we are competing for investor interest. And so you will have investors saying, I would like to come to West Africa. What country is going to be worth my buck? And so essentially what they're going to be looking for is which one has that sweet spot when it comes to risk and reward, that at the end of the day, we know that we're going to, be able to repatriate our funds. That's something that, investors are still very much concerned about it. We've made all this money here in Nigeria, but I'm struggling to get it out. So there's still a whole lot of issues going on locally that need to be addressed. But at the same time, it's good to know that Nigeria is moving towards a path of progress.
Yeah, that is definitely good to know. But what African countries have seen the biggest positive movement in their overall risk-reward scores between, say, 2022 and 2023? And what is Nigeria's performance?
So we've seen Zambia, Morocco, Senegal, Cameroon, they've made improvements, and really it's really driven by different factors. So whether it's a reduction in the risk or an improvement in the reward, or a combination of both. But what you would see across board in all of these different areas is that many African governments are increasingly taking a risk approach to policymaking, where they're looking at policymaking from a business point of view, from a private sector point of view, to be able to say that, okay, if I was a private investor, would I come and put my money in this country? What are the main pain points, and how can I address them with policy? And so that's something that we've seen increasingly, and this is really due to the fact that a lot of different policymaking processes are now involving more private sector consultations. You have different committees that have different, industry moguls sitting on those committees that are advising the government on the direction to go to. So it's a mix of both politicians and technocrats, and I think that is really what is essential for moving forward when it comes to using policy to address some of the different risk concerns and amplify the opportunities that exist in the different markets.
Looking at the reports here, I see the countries with the biggest positive movement. We see Zambia, Uganda, Cameroon, Morocco, yes. Senegal. Yes. What can Nigeria learn, from these countries?
So what you would find, the first thing that I would highlight is when it comes to finance and the ability for Nigeria to really key in to the potential that the private sector holds. What you see in that finance, when you talk about finance, is extremely broad. It covers everything from government financing to private sector financing, but even to development, to aid. But essentially what it is that because of the different local issues that exist in the regulatory environment, because the regulatory environment continues to be a little hostile to investors, whether they're foreign investors or local investors, it then puts a cap on the extent to which private sector investments can really be mobilized. And so essentially what you'll find in some of these countries is that they've seen an increase in private sector investment, whether it's FDI or local companies that are just investing more. And essentially what Nigeria can learn is looking at how to harness that potential by creating a business environment that is favorable, and that involves several things.
Right, and when we see most of these countries, the risk reward there with Nigeria, that was about 7.65 for risk, 5.5. Yes, yeah. What do you think would be that sweet spot, for Nigeria at this time, and what policy recommendations would you give us?
To be honest, the sweet spot will vary depending on the investor and their risk appetite. There are some who they don't really care too much about the risk. They just want to know the reward because they have really strong risk models in place to be able to mitigate some of those risks. So it's going to be varied across different sectors. You have investors who they don't want any stress. They don't want any problems. They just want to put their money. And if there's going to be any potential for, there's going to be anything that could possibly hinder them making that or experiencing the rewards, they're just going to pull back. But I would say that when it comes to really addressing some of the concerns that we see, it's about creating that favorable business environment, like I mentioned. And this is very varied in the approach that can be taken. It means taking a holistic, big picture approach to policymaking where different regulations are not in contradiction to each other, whether it's tax regulation on one hand, where the government is looking to ramp up revenue, but at the same time that is being a deterrent to investors because they're now having to pay more tax. So it's really, and again, that involves then bringing the private sector stakeholders to the room, putting them as part of the conversation to be able to understand what some of these, the things that they're considering internally. Because at the end of the day, we just want to have the private sector booming, because that's what's going to create the jobs. That's what's going to create income for the different households. That's what's going to help us to alleviate poverty. So, but while we do this, you can have a very strong policy environment in place. But if you have lingering security issues that Nigeria does, it still doesn't. It's still not enough. And so you can address issues of repatriation and forex scarcity. You can address issues of just general, ease of doing business and how easy it is maybe to export or import or whatever it is, customs. But if those security issues continue to linger, that's going to continue to remain a challenge even in the long term. And so this goes from everything from crime, kidnapping. We've seen an increase in kidnapping, even in some of these areas that previously used to be safe, where kidnapping once upon a time was a thing that only happened in a certain region. Now it has moved across board. We've seen increase in, some of the activities by different groups that are looking to, secession from the country, secede from the country, pardon me. And so, those are some of the considerations that are then had if someone wants to come into the East, for example. If an investor wants to bring their money into the East, they're going to be looking at some of those security concerns. How much does this pose a risk to my operations if I come in, to put my money here? Because I'm going to be making my investments here, my assets. It's not very easy to pull out from a country once you've gone in, or even if I'm already in to expand. And so those are some of the different considerations. And so there's quite a bit that goes into creating that environment that helps investors to mitigate risk and also amplify the different opportunities.
Definitely a fully packed report by Credit Risk there and Oxford. And I do hope that, looking at the bars at some point, see Nigeria's risk, all the way down, maybe to about 2 or 1, that we'll see reward huge, maybe 10 points. Hopefully, maybe the next time you do that report. Yeah. Thank you so much. That was Ludamilare Adesola, Associate Director, West Africa Control Risk. Thank you so much. All right, let's take a look at how your money performed on the AFEX Commodities Exchange for the last trading week. There was mixed performances across key indicators. We saw turnover that fell by 6.10%, closing the week at 4.31 billion naira from 4.58 billion naira. Therefore, number of volumes traded also dropped by 12%. Number of deals traded, that rose, on the flip side, 34.51%. Closing at 152 from 113 in the last trading week. The AFEX Commodity Index witnessed a decline for 5.46%, while the AFEX Export Index maintained at 229.25 points. To the volume of contracts traded, there was an increase in volume across maize, paddy rice, we talked about paddy rice earlier, price across export commodities, sesame, cocoa, ginger, wheat, sorghum, soybean, and paddy rice maintained at 1,247 naira, 1,972 naira, 989 naira, 440 naira, and 300 naira respectively. Other commodities witnessed mixed performances, with cashew nut rising by 5.45%. Closing at 540 naira 17 kobo. Across grain commodities, maize fell 18.53% and closed at 410 naira 12 kobo per kilogram. And if you want more information, just head on to the AFEX website. You can follow them on all their social media platforms to get more information. You can also download the app right there on Google or iOS. All right, let's take the conversation forward now. Today, we see Africa's agriculture sector faces challenges hindering its contribution to economies, from fragmented markets to poor policy and the infrastructure coordination. Making a stable sector has been quite elusive there. Let's see what AFEX is doing to create stability within the sector. Join us now is Chinwe Lemoha, Associate Strategy and Corporate Finance, AFEX. Great to have you on the show.
Thank you. Thank you very much. Thank you for having me here today.
Right.
Always a pleasure.
Always great to have you. So, since I was in secondary school, we've always talked about problems of agriculture in Nigeria, problems of agriculture in Africa. Paint a picture of what it's like right now in Africa, and what are some of the challenges faced in terms of stability.
Okay. Thank you for that question. Currently, agriculture in Nigeria, or in Africa by extension, is an important economic sector which employs about 2/3 of the continent's working population and contributes about 14% of that to the GDP in sub-Saharan Africa. However, it seems that we haven't fully optimized our potential as a continent, and then we have like a myriad of, or a plethora of challenges that are facing the agricultural sector in Africa.
Yeah, so what are the key factors that, contribute to ensuring, so we can have some kind of stable and sustainable agricultural development in Africa as a whole?
Okay, thank you again. So when you look at the agricultural ecosystem, the first thing that always comes to mind is education. So how can we review our curriculum to ensure that everyone starting from the grassroots level is educated upwards to understand and value, appreciate agriculture? So let's take an example from Singapore. When the then President Lee Kuan Yew wanted to introduce something, he wanted people to appreciate the military, he wanted people to understand the military. He went ahead to introduce it in their curriculum, and then everybody looked up to the military, to the soldiers, as something that they wanted to be part of. And this is something we can bring into our education system to ensure that people do not just see agriculture as something for a particular segment or a particular people, but something that everybody has to appreciate, something that everybody has to value and want to be part of it. So when we move from education, the next point that comes to mind is technology. So this generation, my generation, we are digital natives, as we are popularly referred to. And these people are people that have grown with the media, with technology. And when we are properly educated and introduced into this system, naturally, technology comes with us to ensure that we help the agricultural sector, ensure food security and agricultural productivity in the ecosystem. So when we have moved from education, technology, naturally what comes on, the next thing for us is to prioritize industrialization of the agricultural sector. And what we're talking about here is not just producing raw materials, or not just exporting raw materials, but then having end-to-end ownership of the entire agricultural value chain. And then this would mean having value-added products. That's what we export. So moving from just domestic consumption and thinking about value-added export products. So these are some of the factors that will help us make that transition that we are looking for in the agricultural sector.
Definitely. And we know access to markets and trade is crucial for agricultural development, but how can stakeholders and organizations and many of the players in the sector, how can they strengthen the agricultural value chains and improve market access for farmers?
That's really interesting. That's really interesting to note. But I like to see it in two ways: the demand and the supply side. So the demand side, which will involve investment in farmer engagement. And this is something that AFEX does well with our outreach programs. You have to educate the market. You have to, like the education point we raised earlier, we have to educate the market, give them best practices on how to improve their yield and income by extension. And then this contributes at the end of the day to the whole SDG goals and to the SDG goals. And then on the supply side, we understand that the African market is really fragmented. The commodities market is really fragmented. So what we think of is how to bring all of these different players across the value chain together, and this will reduce distribution cost, warehouse cost, and all of these things. So massive collaboration on the supply side to ensure that we are promoting food security in Nigeria. So just to drive the point home a little bit, something happened in Tanzania. Since we're talking about Africa, something happened in Tanzania a while ago, and there are two breeds, there are two seeds in the country. We have the one that was pushed by a private firm, and then the one that the government has been, giving to the farmers. But then when this private company went ahead to do market engagement with farmers, it led to a 60% increase, 60% adoption rate, as against the 20% adoption rate of the normal hybrid seed. So this tells us that the farmers that were adopting this new improved seed understood what the market was requesting for. And this is something that we should start thinking of, market engagement. These farmers that we have, these farmers are people that produce food for the entire continent. So we have to involve them in the decision making, we have to involve them in processes and all of these things to ensure that we have a secured food system.
Right, I guess the farmers have to be protected at all costs, at this point. But how can, talk to me about partnerships between, governments and non-governmental organizations. How can, the private sector and, all these sectors contribute to a more stable and prosperous agricultural, sector for, Nigeria and Africa as a whole?
Thank you again. Against the backdrop of limited resources, which we talk about in the country, limited resources on the government hand, limited resources, everybody's talking about limited resources. But we need to start looking at innovative partnership solutions to help the entire ecosystem. And then just to address some of the key players across this, or the key players in the ecosystem, we'll be looking at the civil society, for instance. The civil society can help in promotion, in awareness of what is going on in the agricultural sector. So remember when we talked about education being an important tool. So this civil society can ensure that this advocacy of industrializing the agricultural sector is flourishing. Then we move on to non-governmental organizations. And these people can help in funding and the rural education we talked about, farmers' education, investing in research and development to ensure that we are not just doing trial and error methods, but then we are using best practices that will give us the best results, that will ensure food security at the end of the day, because that is the goal. In addition to this, we're also looking at what the government can do. And on the government hand, we would like to see more formulation of policies that help the entire system, the entire ecosystem. For instance, things like access to credit facilities for farmers, since they need to get input as well as increase their income. And the government can also help to provide tax reliefs to companies, to private companies that are doing the work in agricultural sector, like AFEX, and providing grants and all. And then the private organizations, on the other hand, can or will continue to do the work of leading, driving initiatives, driving the execution of these policies, driving the goals, the things we talk about, these initiatives. This is what the private organization. So when you talk about the collaboration of the entire ecosystem, you see that every player across the chain is important. Thank you.
Every player is important. Thank you so much. That's great having your perspective. Chinwe Nlemoha, Associate Strategy and Corporate Finance, AFEX. Thank you so much.
Thank you.
And don't forget, again, you can visit their website there, africaexchange.com, and you can follow them on social media at AFEX Nigeria and at COMEX by AFEX. All right, we'll take a moment now. Now it's time to talk money with Anyete, and looking at the fixed income market today. But the equities market, Anyete, recorded the same gain amount, from Monday,
good morning,
0.71%. The same amount.
Yes, that's no mistake there.
Shall we call this a deja vu at this point?
Well, you won't really call it a deja vu, because when you take a look at the figure here, 67,000 points was what we talked about just yesterday. But then 68,000 points, we're back at it again.
Right.
And that's historic high, 68,000 points. And then, of course, also when you take a look at this, the figure is almost the same figure that you had in Monday's trading session. So the bulls still had it, and almost the same. Let's just call it the same, a twin gain, which was what we recorded on Monday. And for Tuesday's trading session is also the same, 0.71%. And also in basis points, that's more than 480 basis points gain. So investors are really making money.
Still a gain.
But I'll give you the details. Now, for this market, there you have it. The year-to-date gain, it has increased. Nigeria's stock market is still among the world's best performing stock markets in terms of returns on your investment. So if you're not investing in any form of investments, the stock market might as well be your option. 31.15%, that's the year-to-date gain, all the way from 51,000 points to about to more than 68,000 points. Let's take a look at the other side of the market, the sectoral performance, only the consumer goods. Thanks to Boer Foods, the market, Boer Foods was up by about 6%, 6.3% approximately. So that was what lifted the market. But you also saw banking counter, the industrial goods counter was on the flat side. Insurance was in the red, oil and gas was in the red. But with all of this, we also had about 35 gainers in contrast to 27 losers. So all the same, it's a win-win situation for the market. Now, the other side of the market, for activity, in terms of activity, we had just the volume of transactions was in the green, while we saw a pullback in terms of the value and the total number of deals. Now let's get to the fixed income market side of the market, starting with the bonds market. We saw bearish sentiment there. It was a quiet trading there for the fixed income market. Bonds market on the FMDQ Securities Exchange, where that is traded. So we saw kind of a bearish performance there. The average yield there it increased by about 1 basis point to 14.4%. But take a look at your board there. 22nd of January 2026 paper and the April 2037 paper, 9 deals. Moving over to the other side of the market, the Treasury bills market is also a similar sentiments there. But to give us a very bigger picture on that market, let's talk to Princess Iruova, fixed income dealer at FSDH Merchant Bank, to give us more details on that market. Thank you for joining us, Princess.
Thank you. Good morning. Thanks for having me.
Okay.
Good morning.
Yeah, so please just give us details of yesterday's trading at, for the fixed income market. Are investors wary of this market because it's been bearish for quite some time now?
Okay, like you rightly said, the fixed income market has been bearish, and that's largely been driven by what we've experienced in terms of system liquidity. So overall, for the past 1 month, we've seen a largely tight system liquidity, and that has resulted in some form of sell-offs across the bills and the bond space. We expect that this would continue going into next week and even for the early part of Q4. We don't have any major inflow expected into the market or structured inflow. We have a bit of coupon coming in next week. However, it will be important to note that Monday was a bit different. A lot of coupon reinvestment activity spot demand. But at yesterday's trading session, we saw that demand win off, and we expect that market will remain largely bearish.
Okay, Princess, I think we'll leave it there. But like I'd always say, our eyes are always on the markets, the fixed income, the equities, as well as the unlisted securities and the forex market. But we thank you for your time on our show. That was Princess Iruova, fixed income dealer at FSDH Merchant Bank, giving us details of the fixed income market. No, so that's Ladi. So I would have given you more details, like I'd always say, but time is never your friend.
Yeah, time and money.
Money could be your friend.
Maybe money could be your friend.
Exactly, when you put it in the right places.
And you wait for the right amount of time.
Exactly.
Thank you so much.
Pleasure.
All right, now, so we'll head on to the crypto market now. Take a look at what's happening there. We see Bitcoin there started another increase above the 26,800 level. Resistance zone, and we see Bitcoin has remained well bid and even settled above that 27,000 pivot level there. We see the color is green right there in the market. Green is the color we're seeing right now, and most pockets of red come from BNB, AFEX, Cardano, LTC. Those are the red pockets we see in the market today. Let's look at the sentiment right now. Let's see how traders are feeling in this market. If we look at the sentiment, we see it's still fear in the market at this point. Bitcoin $27,067, staying above this level by a hair's breadth at this point, 1.05%, a big jump. XRP, 51 cents, trying to stay above 50 cents at this point, 1.08% up. And we see Binance coin there, the token for the cryptocurrency exchange. Binance holding on 0.04% down. Cardano, ADA, 26 cents down marginally, about 0.03%. Well, let's bring in Olumide Adesina, our financial market analyst, bring us up to speed. Hello, Olumide, good morning.
Yeah, good morning, Ladi. Thanks for having me.
Yeah, so all eyes on the Fed today, Olumide. Depends on what the Fed chair says today. With markets are definitely going to react to that. So what are you expecting for the Fed meeting? That's today. Later on, we'll get that report. What are you expecting, and how do you see Bitcoin and the cryptocurrency market reacting to the decision and forward guidance?
Just like you said, bookmakers are waiting for the outcome of the US Fed meeting, knowing fully well how the most powerful central bank plays on risky assets around the world. But particularly if you look at the fact that Bitcoin seems to be recovering after disastrous August, tells you fully well that inflows are coming in, and there are bets that at least we might see the approval of a Bitcoin spot ETF very soon. Also, you look at the narrative around transactions. Nigeria happens to be growing in transactions. Data from Chainalysis shows that between June 2022 and July this year, about $56.7 billion was transacted by Nigerians, on telling you that there was a growth of about 9%. If you look at that with traditional finance, it tells you that Nigerians are really shifting away from the official channel to the stupid market, and that's why we're seeing that record inflows. And also, you know, the systemic role the crypto market is playing, despite regulation as poor, has really kept interest high. So I think my bet is that if the US Fed keeps interest rates as the status quo, well, we might see appreciation in assets like Bitcoin and other altcoins. But if the US Fed talks more about increasing interest rate, definitely interest in US-denominated assets, particularly US Treasury bonds and the US dollar, would really mean a moderation in risky assets.
Olumide, we know investors always pay keen attention to forward guidance by the US Fed. What are you expecting today? What do you think the Fed is going to say that's going to rattle markets going forward about what's going to happen with rate hikes?
With oil prices looking at approaching the $100 barrel mark, and you know fully well how energy inflation plays in those markets, I think the hawkish narrative will still be in play. But a lot of traders are betting that the US Fed might not look at increasing interest rates till the end of to the start of next year, but we will see an hope high plays out. But particularly, I think the hawkish narrative will scare the market and push Bitcoin back to $25,000 support level if it sounds very hawkish.
Right, Olumide, I can just imagine in my head a dovish central bank at this point, or MPC or Fed. I wonder what that looks like. It's been a while since I've seen that. Well, Olumide, always great to have your perspective. Thank you so much.
Thank you for having me.
All right, we'll flip over to the top Guinness counter now. Let's see who's topping that. Flair token there, FLR, 1 cent, up 6.96%. And we're seeing GMX pairing again on the top Guinness counter today, $36.02. That's up 3.76%. Look at the top losers this morning now. We'll see who's topping the losers counter. We'll see Comp, $39. Gala, that's Metaverse token there, 1.67%. So we're seeing single-digit losses this morning with eCash. I see some profit taking on eCash. It was on the top Guinness list yesterday, but I see profit taking it down 1.22%. So that's how the crypto market is looking today. Still fear in the market. All eyes on the US Fed. What are they going to do next with the rate policy? And don't forget, you can join us at 1:30 on Business Incorporated for more updates and developments in the world of business. And you can watch this again. Remember, you can watch this again on our YouTube channel. Flip over to YouTube, click on our videos. You can watch all our production and head on to our website, www.channelstv.com for more information. Again, I'm Ladi Williams. Thank you for watching. Bye for now.